Hi, this is Wes Johnson at Act Advisors with your monthly update for July 2025. So June was a really good month. The S&P 500 gave us over 4% for the month of June. And more importantly, the S&P 500 finally fully recovered from the almost 20% sell-off that we went through in March and April. So now that we've recovered, we always get the question, what happens next? Well, one of our research partners put out a piece this morning that analyzed all the 10 to 20% corrections we've had and what happens from the point of recovery, which is basically Friday of last week, going forward. And the data was very optimistic. So 6 months after the point of recovery, again, point of recovery is Friday of last week, 6 months later, the average rate of return up over 9%. And over 90% of the scenarios, the market was positive. If we extend that out 12 months from the point of recovery, the data is even better. The average rate of return is over 16%. Again, over 90% of the time, the market is positive 12 months later. So the stock market doesn't just fully recover and then stop. It generally fully recovers and then keeps on going. So hopefully we'll see a similar behavior out of this market that we've seen from the previous markets. And I do want to point out, the S&P 500 has fully recovered, which is tech dominated with large cap growth stocks. Tech has really led the way during this recovery. If you look at the Dow Jones is not quite fully recovered. Mid cap stocks and small cap stocks still have a lot of recovering left to do. So, the major index that most people reference is the S&P 500, and that's the one that's fully recovered at this point. Shifting to the bond side of the portfolio, bonds had a really good month last month as well. They made about 1.5%. I realize that doesn't sound like a lot, but if bonds gave us 1.5% every month for 12 months, it's an 18% rate of return over the course of the whole year. So 1.5 is a lot for bonds. And really what triggered that was we got a CPI number, an inflation number in the first week of June. It was the May CPI number, and inflation came in lower than expected. Lower inflation usually means lower interest rates. That's good for your bond investments. So really good month for stocks and bonds in the month of June. The rotation strategies. So the stock rotation strategy, which is in everyone's portfolio, every month it rotates into whichever area of the market has the best momentum. Sometimes it rotates into cash. Well, that spent the month of June in the NASDAQ ETF. QQQ is the symbol. We call it the Qs. It's a tech-heavy ETF. The month of July, it's going to stay the same. So there's no change in the stock rotation strategy. It's going to stay in big tech. The bond rotation strategy, very similar concept, but it usually holds 3 positions. There are some changes in the bond rotation strategy. The month of July, it will hold senior floating bonds, high yield bonds, and the bond index. So there will be some changes on the bond side. So with that, I do want to congratulate everybody on riding through a pretty nasty pullback in the months of March and April. S&P 500 finally fully recovered as of last week. And as always, thank you guys for being clients and hope you have a very happy and safe 4th of July.